Welcome back, everyone. Today we're diving into something that should be interesting for anyone who follows ULTY, or really anyone interested in options trading and how it works in the real world.
Definitely.
We're talking about YieldMax ETF,
hmm
and they're known for those high yield payouts.
Yeah,
And okay, maybe also known for keeping investors a little bit on their toes.
it's been making headlines, that's for sure, both for those juicy monthly distributions, but also for some of the ups and downs in its net asset value.
Right, exactly. Like, we get it, ULTY. You're not afraid of a little options trading to boost those dividends, right?
Right.
But historically, that's also meant kind of hitching your wagon to some pretty volatile stocks
Mm.
because, well, bigger swings mean bigger premiums when it comes to options.
Mm.
What's interesting now, though, is that ULTY has filed an updated prospectus. It's like they've been given a whole new playbook.
Yeah, it's a big change. Before, their strategy was mostly about covered calls.
Yeah.
A way to generate income by basically selling someone else the right to buy your stocks at a certain price.
Okay.
It works, but it's limited. Now they have the green light from the SEC to use way more options strategies.
Hmm.
We're talking about things like credit spreads, diagonal spreads. They can even do cash-secured puts and callers.
Okay, so some of those sound seriously complex, even to someone who, has heard of covered calls but not these other things. What's the big difference?
It's about flexibility and control.
Okay.
Like,
Yeah.
imagine covered calls are like owning a rental property. You get that steady rent, but if the property value suddenly goes way up, you only get so much of that benefit.
Right.
With these new strategies, it's more like having a whole portfolio of real estate. You can rent some for steady income, sure,
Yeah.
but you could also use options to buy or sell others strategically and maybe profit from different conditions in the market.
So more tools in the toolbox, but it also takes more skill to use them the right way. What I'm curious about is, does this change what ULTY is actually trying to do? Like, they still want to give investors that monthly income, right?
Oh, absolutely. That's still their core goal, generating a steady monthly income stream for investors.
Okay.
And it's not like they've totally given up on the idea of profiting if the market goes up.
Yeah.
But
There's always a but, right?
yeah,
What's the catch with this bigger, more complex strategy?
the catch, and it's a big one, is that every single option strategy comes with its own risks and its own potential rewards.
Sure.
So yeah, they could generate some really impressive income, but there's also the potential for bigger losses if the market goes against them.
It's like they traded up from a Stody bicycle to a high-performance race car.
In a way, yeah. But with a race car, you need a skilled driver to handle all that power, right?
Exactly. And how does this actually play out, in the real world? What are some specific things ULTY might do differently with all these new option strategies they can use?
Okay, so let's say they're using something like a credit spread.
Okay.
This might mean they sell an option with a higher strike price. So the stock needs to go up more for the buyer to make money, right?
Right.
But then they'd also buy an option with a lower strike price at the same time. This basically creates a spread, and it limits how much they can win or lose.
So it's a way of managing risk, basically.
Yeah, exactly. They're not putting all their eggs in one basket.
Sure.
They're setting up a strategy that could make money within a certain range, even if the market doesn't move a lot in one direction or the other. Of course, the trade-off is that their potential gains are also limited.
A classic trade-off. Okay, we have got to talk about this Reddit thread that you shared.
Oh, yeah.
People are saying that ULTY has gone from, like, playing checkers to wielding dynamite and rifles.
Right.
Is that just, like, typical Reddit exaggeration, or is there something to that?
Well, there's always some exaggeration on Reddit.
Of course, yeah.
But in this case, I think it shows how excited and maybe how nervous people are about these changes. Some investors are really excited,
Yeah.
hoping this means a more stable NAV and even better payouts. But then, others are worried about how complicated it all is.
And rightfully so, right? I mean, just because you have more tools doesn't mean things will automatically get better.
Mhm.
So what are some things that investors should be watching for to see if ULTY is actually handling this increased complexity the right way?
Well, one thing to keep an eye on is their expense ratio.
Okay.
More complex strategies usually mean higher fees. So you have to see if that higher cost is actually worth it based on how well they perform. Another important thing to look at is how consistent they are with paying out those monthly distributions.
Right.
Are they still making those payments regularly, Or are things becoming less predictable?
So really paying attention to those numbers is key. And speaking of important factors to watch, we can't forget about market volatility.
Right.
It feels especially relevant here because options trading can be so sensitive to big market swings. It's
Yeah.
like that old saying, don't just watch the surfer, watch the waves. Volatility can make or break an options strategy, right?
Absolutely, yeah. And for an ETF like ULTY, it's a really interesting thing because it can be, a good thing or a bad thing. So the good news is higher volatility usually means you can get bigger premiums on those options contracts. So in a way, a market that's all over the place can actually work to their advantage, at least when we're talking about making money.
So volatility isn't always the enemy. It's more like it depends.
Exactly. It's all about finding that sweet spot. The problem is when volatility gets too high,
Right.
it's kind of like trying to steer a boat in a hurricane.
Right.
You know,
Yeah.
the chances of making a bad trade at the wrong time go way up. Or even worse, getting caught on the wrong side of a big sudden market swing.
And that's where this expanded options playbook is supposed to help, right?
Right.
They have more strategies to choose from, so the idea is that they should be able to handle those wilder market conditions better.
Exactly. It's like
Yeah.
having more tools, right? You use different ones depending on the weather.
Right.
So if the market is going crazy, really volatile, they could use strategies like protective puts or collars. These can help to limit how much they could lose. And then, if the market is calmer, they can go back to using strategies like covered calls or those cash secured puts to generate income.
Okay, so that makes sense. But, we should also talk about the potential downsides.
Right.
You mentioned that there are some risks that investors should know about before they, jump in with both feet now that ULTY is using these more advanced strategies.
Yeah, for sure. And I'd say the biggest risk is that this stuff is just more complicated.
Okay.
These strategies, they require a lot of analysis and timing
Right.
and just really careful management. There's just way more room for someone to make a mistake.
Yeah.
And those mistakes, they can cost a lot more in a market that's all over the place.
So it's not just about picking the right tool for the job, right?
Yeah.
It's about knowing how to use it too. Okay, so what else? What are some other things investors should be looking out for?
Another risk is what we call opportunity cost. Basically, if ULTY is too busy trying to protect itself from losses,
Right.
they might miss out on some gains if the market takes off.
Right.
It's always this balancing act, between protecting on the downside and being able to benefit from the upside.
And we can't forget, even if you have the best strategies in the world, there's still a chance you'll lose money.
Yeah, that's the thing about options trading. It always uses leverage, which means the wins and losses can both be bigger.
Right.
I mean, it's good that ULTY uses U.S. Treasury bonds as collateral. That does add some security, but
Yeah.
it's not perfect.
No.
If the market goes totally against them, those losses can really add up.
So for someone out there listening, thinking about investing in ULTY or maybe already invested, what's the one thing you want them to take away from all of this?
I'd say this revamp is potentially a really good thing,
Yeah.
but it also means investors have to do their homework, like really do their due diligence. Don't just chase the yield. You have to look under the hood, understand the strategies they're actually using, see how they're doing, track their performance, and most importantly, make sure you're comfortable with the level of risk they're taking.
Do your homework, folks. Knowledge is power, right?
And on that note, that wraps up our deep dive into ULTY's bold new approach.
It'll be interesting to see how it plays out.
Until next time, everyone, happy investing.